G'day and welcome to another episode of the Aussie Investing Machine. Thank you so much for joining me. In this episode, which will be one of a three-part series, we're going to talk about real estate investing in Australia. In this series, we'll look at different ways you can invest in property in Australia. We'll cover buying and holding property, making improvements to property, and then also putting property up for short-term rental options such as Airbnb, Booking.com, and others. Now, before we get started, I just want to say that I'm not a financial advisor. And before doing any investing, make sure you do get some professional financial advice. In this first episode, we'll be looking at buying and holding. The general strategy with buying and holding property is to realize increases in capital gain over the long term. Now, a lot of this information I've learned from a couple of books, which I will link in the description below. These are certainly very helpful with giving you a well-rounded picture of the Australian housing market, and I would definitely recommend you pick these up and read them. Now, when looking at residential property, it's important to understand where we lie on the property clock. Now, the property clock is another way of saying where we lie within the property cycle. Investing at the wrong point in the market cycle could lead to almost immediate losses on your investment. In the long term, perhaps you'll see success anyway, but similar to stock market investing, there is an element of timing the market that needs to be taken into consideration for the best gains. This is especially important if you're only planning on doing a short-term property investment and trying to generate some quick capital. Now, property cycles in Australia typically range from 7 to 13 years. It's also very important to consider that the property cycle is not the same across all of Australia. Different towns and cities will be at different stages of the property cycle. There are, however, national economic conditions which will pull the market cycle one way or another. Factors that influence this cycle include population, economic factors, infrastructure factors, and also employment opportunities. Currently, Australia is in a low interest rate environment, which makes borrowing money quite cheap. This is currently fueling property prices up, as I'm sure you would have seen. We're also seeing a lot of infrastructure spending, which in turn creates employment. Areas where this infrastructure spend is happening will also see increased gains because of this. However, one factor which is definitely suffering at the moment is population growth. Because of the pandemic, we have seen immigration completely stop to Australia. Now, we know that Australia's population growth requires immigration in order to achieve the growth that it's been having for the past 20 or 30 years. At the moment, though, it seems this is not influencing the property market just yet. However, if sustained, it definitely could, with supply of housing eventually overtaking demand. Although it is worth noting, and I'll put an article up on screen, the federal government is definitely pushing very hard for a return to immigration. We've just recently seen the 4-stage COVID plan come out from the federal government with an aim of getting us back to COVID normal and immigration. I think the federal government is well aware that population growth is key for this country's economy and also for the housing market. State governments are also especially keen for continued property growth. We know this because they take a lot of their revenue from property generated tax. This is in the form of primarily stamp duty and land tax. The money collected from these taxes is what they're using to spend on these major infrastructure projects, which are fueling employment and investment in the country. So all in all, it's important to consider that for the government, increasing property prices are definitely a priority. I know I've gone off on a bit of a tangent there, but that gives you a snapshot of the current economic environment in Australia relating to property prices. It also gives you a bit of insight in terms of the factors that are driving up property prices. So once you've considered all of these growth factors, perhaps you've identified a particular town or suburb that you think might be worthy of investment. What are the factors that we then need to look at in detail? Well, they include clearance rates, vacancy rates, days on the market, and stock on the market. Now, attaining this information can be quite tricky. I've been using a website called SQM Research. Again, I'll leave a link below in the description. SQM provides a lot of this property information completely for free. However, if you need more detailed and comprehensive data, you will have to pay. CoreLogic is the major provider of property data in Australia, and a subscription may well be worth it if you're taking investment seriously. So coupled with this data, there's a checklist we can use to get an idea of which direction a particular town or suburb might be heading. This includes looking at the 10-year annual average return, the relationship between capital growth and rental return, the number of sales, whether they're rising or falling, and the relationship between prices and rents compared to similar areas. Now, feel free to go back and pause the video to review that checklist at any time if you're going about doing your own property research. Keep in mind it is just a guide, but it should give you some pretty good direction about a particular area. So that is a lot of information to take in. Now, of course, this guidance is not exhaustive and it's certainly not a crystal ball, but it should give you some pretty good guidance when you're looking for a property to either own or invest in. A lot of property purchasing is done on an emotional basis, so looking at some of these factors can take the emotion out of making a buying decision. This should also set you up for good growth in the coming years. Now, I thought it would be a great idea to end this video with an example applying some of these factors that I've just spoken about. So let's take a look at a particular suburb together and see how it stacks up. Okay, everyone, let's get on with this example. What I wanted to show you here is the use of the different tools online to profile a suburb and to check against some of those factors we talked about earlier in the video to see whether or not it might be worthy of investment. Okay, so right now I'm on domain.com, which is one of the big two online real estate websites in Australia. I wanted to look at two suburbs today just to give you a bit of a comparison between essentially one suburb where we see a lot of owner occupiers and the other suburb has predominantly renters. So on Domain, if you head over to the research drop down here and then click suburb profiles, it says learn about your suburb, and the first suburb I wanted to look at was Pakenham. So type that in, wait for it to load. Now this gives you a really good snapshot. So we can see it gives you the postcode and a little bit about the demographics. And here we can see what I was just speaking about. 68% owners versus 32% renters, and that's on the high side for owners. And we can see that it's pretty much an even split between families and singles. Having families in a suburb is good for rental return. Families are typically in one place for longer, and this can mean more stable tenants. That's just something to keep in mind. But really here, what I'm interested in gives you a geographic location of where the suburb is, gives us a snapshot of median prices for different size houses and units, and it gives us a high level view of the average days on the market. So looking at your average 3-bedroom house, we can see 44 days on the market, which is quite good. We definitely don't want to have properties that are sitting on the market for a long time. This implies that it's taking time for them to sell, which is not a good thing, and it doesn't really showcase good growth potential. We want properties being snapped up quickly. It shows interest in the suburb, and that's what we're looking for. If we look a little bit further down, we can see the local schools. Now, importantly here, primary schools are important, but if you want a family to stay the duration as a tenant, we also need good secondary schools. So we can see here 1 government school and 2 independent schools in this suburb. We go to private, we can see 3 independent schools. Okay, so the suburb I wanted to contrast this with is St Kilda, which is an inner city suburb in Melbourne. So let's take a look at St Kilda. Okay, so on Domain again, this is the St Kilda suburb profile. You can see here very different demographics, mainly singles and a lot more renters than owners. Average age 20 to 39. If we go back to Pakenham, it's pretty similar. Population is about half though. Coming down, see a similarly sized catchment suburb. We can see the houses median prices are a lot higher, and in turn the average days in the market is
more than double. So waiting over 2 months to sell a house in general. If we have a look at local schools, we can see there are some primary schools, 2 primary schools. But if we have a look at secondary schools, it's very limited, just one private secondary school in the area. So that's a little bit of a snapshot you get on Domain, which, as I said, is a high-level overview of the suburb and a good place to start to see what the demographics, local schools, and things like that are like. And it gives you a quick snapshot of days on the market as well. This is the second website I wanted to talk about, which is SQM Research. This is their homepage. So to get into their property data, we hit this link here, free property data. And that takes us to another page, and let's first look at vacancy rates, which is a really key metric. It defaults to Sydney, but we want to type in our first suburb we looked at, which is Pakenham, just 3810, plug in the postcode, and we can get a good snapshot of 15 years of history on the vacancy rates, which is super valuable. We can see at its highest, it's been around 7%, but it hasn't been that way for a long time. Certainly over the last 7 years, the highest it's been is 2.5%, which is quite low. And at the moment, we're at ultra low vacancy rates. What does vacancy rates mean? Well, this is the amount of rental properties which have no tenants in them. Obviously, we want tenants in our investment property, so a low vacancy rate is desirable. If we then type in, for this same metric, vacancy rates, if we type in St Kilda, which is 3182, you can see here, if you look at the historical rate, we're sort of at our highest, looking about 4%, which is considerably higher than the 2.5% we saw for Pakenham. And currently, we can see this huge spike in vacancies, which aligns with the pandemic. It still hasn't recovered. We're still sitting at 5.5%. But it was as high as 7%. There's a 1 in 10 chance that your investment property has been vacated during the pandemic. This is not what we saw in Pakenham. And I think this is attributed to the fact that, as we saw on Domain, in St Kilda, we're not seeing a lot of families and we're seeing a high percentage of renters. Why are families staying put and why are singles moving out and leaving residences vacant? Well, I think this has a lot to do with the effort involved in moving a family. If you're a single, perhaps you could move back home during the pandemic or find a share house or something like that. With a family, your options are a lot more limited. And I think this really showcases some stability that comes with buying an investment property in an area that is better suited towards families. Let's now take a look at another metric which I've spoken about, which is stock on the market. This is for St Kilda as well, and this graph gives us some really good information. Essentially, it tells us the total property listings here on the left-hand side, so we can see we're at about 250 properties each month, and then the coloured bars indicate how long those properties have been on the market. So you can see recently we've got a trend up in the total properties for sale. However, properties selling in under 30 days is a small percentage. It's about a third. There's a number of properties which are taking between over 30 and even over 60 days to sell. Sort of more than half are taking more than 60 days, 2 months to sell, which is quite a lot of time. If we contrast this and have a look at Pakenham, we can see total listings, don't be deceived, this is quite high. We're still listing 600 properties, so it's a lot more than St Kilda, but we know that because the population's about double. But more importantly, what we're looking at is how quickly these houses are selling. The blue bar here is telling us that 252 out of 580 are selling in under 30 days, which is almost half. We were looking at only a third in St Kilda. The properties selling over 90 days and over that are a lot less. So not only are we seeing better vacancy rates, But if you do need to sell your investment for any reason, you're able to do so quickly in this particular suburb. And I think that's important as well. So having a look at the checklist we talked about earlier in the video, a lot of these questions can be answered using the data from SQM. Having a look back at the SQM page for St Kilda, we can view asking property prices. And this tracks what houses are going up for sale for over the years, and we can go all the way back to 2010. So we can get a 10-year snapshot. We can also have a look at asking rent. If we turn off these other metrics, we can isolate it to 3-bed houses. We can also have a look at the rental trend, and we can do some calculations to see how the two compare. So that helps us answer this question and this question. We can look at the number of sales rising and falling quite easily by looking, as we were before, on the stock on the market tool. You can see it's quite level in St Kilda, and in Pakenham it's been falling. It was a bit of a dip, and it's kind of stagnant at the moment. And then this final question, are prices and rents high compared to similar areas? Well, that's easy to check. You just check the surrounding suburbs, plug in the relevant postcode to SQM, and you'll be able to work that out. It's a bit of upfront work required to answer all of these questions, but it should be something you're doing if you are seriously considering a property investment. These other factors to watch that I've mentioned, which include clearance rates, vacancy rates, days on the market, stock on the market, certainly these 3 we can answer with SQM research. The clearance rates, I'm not particularly sure where to find really accurate data on that item. If anyone does know, leave me a comment below to see what historical clearance rates are for a particular suburb. That's one that CoreLogic data might help with. There's one final item I'd like to have a look at, and that's over here on this web page, which is the VSBA webpage. This is the Victorian School Building Authority. There may be similar authorities in other states, but this is the one I'm familiar with in Victoria. Essentially, this page will show you where funding is going for early learning centres, primary schools and secondary schools. Now this is a snapshot in Pakenham, and we can see upgrade works in terms of, and the funding which has been given to different schools and when that funding has been released. We can see new school builds, and if we zoom out, this data is for all across Melbourne and country Victoria. You can identify areas where there's new schools being built or about to be built. This could also be potentially a good find in terms of investment, because we know this is planned infrastructure. And we identified earlier that we definitely want families to be the tenants in our investment properties, or families are going to need schools, and also primary and secondary schools. They'll need both. So a website like this can help you identify where new schools are being built, and it might help you get ahead of the game. Anyway, I hope this little tutorial helps with your research. Really interested to know what you think. Let me know in the comments below.
Well guys, I hope you enjoyed that video and learned something from it. If you did, please consider giving the video a like and subscribing to the channel. Until next time, that's all from me. Thank you so much for joining me, and I'll see you in the next episode. Cheers.